Good morning, and thanks for joining us on today's episode of Crypto Daily. We have a packed show for you with market moving news and a deep dive into the world of decentralized finance. I'm joined by my co host. Let's get started.
That's right, and what a wild ride it's been in the markets. We've seen XRP and Dogecoin surge by as much as 20% in the past 24 hours, only to dip back down. It's been a roller coaster, and we're going to explore what's driving this volatility.
That's right. The big story here is the ongoing trade tensions between the U.S. and China. Donald Trump's decision to impose tariffs on imports from Canada, Mexico, and China has led to a steep drop in Bitcoin and broader equity markets. And now, China has announced retaliatory tariffs on the U.S., which has dent the crypto rebound.
Exactly. Crypto traders are still mixed on the long-term impact of China's response to U.S. tariffs. Some are seeing this as a buying opportunity, while others are more cautious. We've seen XRP and Dogecoin regress after the news broke, but it's worth noting that they're still up significantly from their lows.
That's right. And this isn't just a story about XRP and Dogecoin. The broader crypto market is feeling the effects of this trade war. We've seen Bitcoin dip below $40,000, and other majors are following suit. It's a reminder that crypto is not immune to global economic trends.
Absolutely. And speaking of trends, we're also seeing a rise in DeFi hacking schemes. A Canadian man has been indicted for allegedly exploiting vulnerabilities in two decentralized finance protocols to fraudulently obtain approximately $65 million from investors.
That's right. Andian Medjedovic, a 22-year-old, is accused of manipulating the smart contracts of decentralized exchange aggregators KyberSwap and Indexed Finance between 2021 and 2023. This is a stark reminder of the risks associated with DeFi and the need for investors to be vigilant.
Exactly. We'll be exploring this story further later in the show, but it's worth noting that DeFi is still a relatively new and unregulated space. While the potential rewards are high, the risks are also significant. Investors need to be aware of these risks and take steps to protect themselves.
That's right. And we'll be discussing ways to mitigate those risks later in the show. But for now, let's take a closer look at the market and see how the majors are performing. We'll also be exploring the long-term implications of the U.S.-China trade war on the crypto market.
Sounds good to me. It's shaping up to be a fascinating show.
We just discussed the impact of market volatility on the crypto space, and it's interesting to see how different platforms are handling the pressure. Building on what we discussed earlier, Aave is making headlines for processing a massive amount of liquidations without adding to its bad debt burden.
That's right. According to Chaos Labs, Aave registered $210 million in liquidations on Monday. What's impressive is that the protocol's existing bad debt actually declined amid the price volatility, showcasing its resilience during these challenging times.
It's a great stress test for the decentralized lending protocol, and it's clear that Aave is designed to handle such market fluctuations. The fact that it didn't accrue any new bad debt is a testament to its robust risk management strategies.
Absolutely. Aave's performance is a positive sign for the DeFi space as a whole. It demonstrates that decentralized lending protocols can be designed to weather market storms, providing a sense of security for users and investors.
Speaking of expanding into new markets, Kraken has just secured a license to enter the EU derivatives market. This is a significant development for the crypto exchange, which obtained the license through the acquisition of a Cypriot firm.
That's right. The MiFID license will enable Kraken to offer crypto derivatives products in the EU, which is a massive market with 27 nations. This move is likely to increase Kraken's presence in the region and provide more options for European investors.
This acquisition-based approach to obtaining a license is an interesting strategy. By acquiring a Cypriot investment firm, Kraken was able to tap into the EU market without having to go through a lengthy and potentially costly licensing process.
It's a clever move, and it highlights the importance of strategic partnerships and acquisitions in the crypto space. As the regulatory landscape continues to evolve, we can expect to see more exchanges and platforms exploring similar strategies to expand their reach.
It'll be interesting to see how Kraken's entry into the EU derivatives market plays out. With Aave demonstrating its resilience and Kraken expanding into new markets, it's clear that the crypto space is continuing to adapt and evolve despite the current market volatility.
Absolutely. As we continue to navigate these uncertain times, it's essential to keep a close eye on developments like these, which can have a significant impact on the future of the crypto industry.
Building on what we discussed earlier about the recent market volatility, Ethereum has just made a significant move that could potentially boost its appeal. For the first time since 2021, Ethereum has raised its gas limits, increasing its capacity to handle transactions.
That's right. This change was implemented after more than half of the validators supported the adjustment, which was enacted automatically without the need for a hard fork. The gas limit has been increased to nearly 32 million units, marking the first significant adjustment in the post-merge era.
This is a big deal for Ethereum as it should help to improve the network's efficiency and scalability. But it's interesting to note that this development comes at a time when the crypto market is experiencing a lot of chaos. We've seen significant price drops across the board, including Ethereum.
Exactly. In fact, according to data from CoinShares, last week's volatility led to zero net flows in Ethereum investment products. This is the first time since the new US-based ETFs got approval last year that weekly flows based around Ethereum have evened out to zero.
That's a pretty stark contrast to the optimism we've seen around Ethereum in recent months. The second biggest crypto has taken a beating in recent days amid Trump tariff and trade war fears, as well as broader market volatility.
And it's not just Ethereum that's been affected. Bitcoin has also seen a significant decline in ETF flows. According to CoinShares, Bitcoin ETF flows have fallen to their lowest level since 2020 at
So what does this mean for the crypto market as a whole? Is this just a blip on the radar, or are we seeing a more significant shift in investor sentiment?
Well, it's hard to say for sure, but it's clear that the recent market volatility has had a major impact on investor confidence. However, it's worth noting that Ethereum's decision to raise its gas limits could be a positive development for the network and could potentially help to boost its appeal in the long run.
Absolutely. And it's also worth noting that the crypto market is known for its volatility, so it's not uncommon to see significant price swings. But as always, it's going to be interesting to see how things play out in the coming weeks and months.
Definitely, we'll be keeping a close eye on the market and bringing you updates as more information becomes available.
We just discussed how the ongoing trade war has led to a crypto bloodbath, with Bitcoin and altcoins plummeting in value. Building on what we discussed earlier, it's clear that the market is highly volatile right now.
Absolutely, and it's not just the trade war that's causing concern. We've seen some of the largest liquidations ever in the crypto space, with altcoins down by as much as 50% or more in some cases. This is a really tough time for investors.
Yes, it is. And if you look at the current prices, it's clear that the market is in a state of flux. Bitcoin is trading at around $98,811, with Ethereum not far behind at $2,727. But some of the other altcoins, like XRP and SOL, have taken a real beating.
That's right, and it's not just the prices themselves, it's the volatility that's causing concern. We've seen some huge swings in value over the past 24 hours, with some coins gaining or losing 5, 10% or more in a single day.
Speaking of volatility, it's interesting to note that Coinbase has just received approval to offer digital asset services in the UK. This could be a big move for the company and potentially a sign that the regulatory environment is starting to come together.
That's a great point. Coinbase has been working hard to expand its footprint in Europe, and this approval is a big step forward. The virtual asset service provider license will allow the company to offer digital asset trading to institutional and retail clients in the UK.
And this could be a big deal for the UK market, which has been relatively slow to adopt crypto compared to some other parts of the world. With Coinbase on board, we could see more mainstream adoption and a more robust regulatory framework.
Absolutely. And it's not just about the UK market itself, but also about the broader implications for the global crypto space. If we see more countries start to adopt similar regulatory frameworks, it could help to bring more stability and legitimacy to the market.
That's a great point. And it's worth noting that this move by Coinbase is part of a larger trend towards greater adoption and mainstream acceptance of crypto. We're seeing more and more companies and institutions start to take crypto seriously. And that's a really positive sign.
Yes, it is. And as we continue to navigate these choppy waters, it's worth keeping an eye on the bigger picture and the long-term trends that are shaping the market. Despite the current volatility, there are still plenty of reasons to be optimistic about the future of crypto.
I think we've covered some really important topics today, from the latest developments in AI to the ongoing saga with Tether. Let's start by tying together some of the threads from our earlier discussions. Lisa Loud's piece on decentralization in AI really caught my eye. What were your takeaways from that article?
Yeah, I think Lisa makes some compelling arguments about the benefits of decentralization in the context of AI research. By spreading out the development and control of AI systems, we can mitigate the risks of a single entity dominating the space. And that's especially relevant in light of the recent DeepSeek breakthrough.
Exactly. And it's interesting to consider how this might play out in the crypto space. We've seen how decentralized networks can facilitate innovation and collaboration while also providing a degree of resilience against centralized control.
That's right. And I think this is where the intersection of AI and blockchain gets really interesting. By combining the two, we can create more transparent, more secure, and more decentralized systems that benefit everyone involved.
Now, switching gears a bit, let's talk about Howard Lutnick's recent Senate hearing. He faced some tough questions about Cantor Fitzgerald's ties to Tether, and his responses seemed to soften his previous stance on the stablecoin stability.
Yeah, it was interesting to see Lutnick walk back some of his earlier assurances about USDT's reserves and the revelation about the convertible debt in Tether's issuer is definitely a development worth watching.
So what do you think this means for the market outlook on Tether? Are investors going to start getting nervous about the stablecoin stability?
I think it's definitely a concern. Tether is one of the largest stablecoins out there, and any questions about its stability have the potential to ripple through the entire market. But at the same time, it's worth noting that Lutnick did confirm that Cantor Fitzgerald has no equity in Tether, which may help to alleviate some concerns.
Okay, so let's summarize the key takeaways from today's discussions. We've got the potential benefits of decentralization in AI research, the ongoing drama surrounding Tether, and the intersection of AI and blockchain as a space to watch. What are your final thoughts on the day's news?
For me, the big takeaway is that decentralization is going to play an increasingly important role in the development of AI and blockchain technologies. And as we move forward, it's going to be crucial for investors, researchers, and policymakers to understand the implications of this trend.
Well, that's all the time we have for today. Thanks for tuning in to our daily crypto news podcast. We'll be back tomorrow with more updates, analysis, and insights from the world of cryptocurrency.
And don't forget to follow us on social media for the latest news and updates from the crypto space.
Until next time, stay informed, stay vigilant, and we'll catch you on the flip side.